Hey guys, good morning. How we doing out there? It is Doc with you here today. Today's Wednesday, the 5th of April. Welcome to Ready, Set, Trade. And let's get going on. All right, good morning, everybody. Okay, what do we have today? We had the ADP employment report. Let's take a look and see what that was. How did that turn out for us? We also have PMI composite final, ISM services at 10 o'clock. Let's see, ADP employment was... Drum roll. Ooh, interesting. Interesting. Consensus 200,000 private payrolls came in at real light at 145. Well below consensus range. So does this help the inflation thing? Are we getting the demand destruction from the Fed that we sort of knew that we were going to get at some point here? So interesting. What do we have the rest of this week? Not much. Just Thursday. Just tomorrow. We have James Bullard tomorrow. We have the big jobs report on Friday. We'll see what we can do today. So not much in the way of earnings until we get into next week. Next week, starting Thursday, we'll have Delta Airlines and Progressive. And then on Friday, BlackRock, Citi, JP Morgan, PNC, Wells Fargo, all that stuff. All right, so we got Midori, we have John, we have Coob. Good morning. Oh, what's that, Coob? All right. The 3 May Feds Funds futures are showing right now, as of today, a higher probability of no rate hike whatsoever. And that goes into June, and we're looking at 75 basis points by the time we get to December. Interesting. All right, let me look at the bonds for a second here. See what the bonds are showing. 2-year note. Oh, yeah, look at that. 2-year note dropping like a stone over the last couple of days. Lower high printing below the 200-day moving average. So rates are going down. The rates are going down. Hey, Scott, good morning. So this week we'll be here Monday through Thursday, so just through tomorrow. Good Friday, market holiday, and then the week after that will be a full 5-day week. All right, so let's get into it today. What can we do? What kind of alpha can we find out there? Let's look at yesterday for a second. Yesterday, here was the opening range. And let's see, what did we do yesterday? Was that a calendar? I did a calendar yesterday, and I had to blow out of this thing for just a little below break even because it started to drop like a stone. It got below the anchored VWAP and just let loose. And I was like, all right, I'm out of here. Calendars do not do well when the implied volatility expands and you can't adjust them because it affects more of the back volatility. Actually, the back volatility did not really expand on this one, so it didn't really help me. So, yeah, I got very close to getting out several times at my profit target, which was $50. It got up to like 35, 40, 45, never did fire at 50, so it was kind of annoying. So that was yesterday. Yesterday, it's not a surprise to see a little bit of distribution coming in because of the fact that we have this super exhaustion out here on the S&P 500. All right, what do we got? Coming up on 4 minutes to go. There's something I want to show you here. So this super exhaustion here, there's no doubt that this helped cause this candle to show up. That's an actual reversal candle, though, because we had a higher high. We had a much lower close that was well outside of the range of Monday's candle. So that is technically a key reversal bar. Now, what we have to see, I got to get my pen going here. Hang on a second. What we have to see is whether or not this creates more of what I call a high and tight flag. If this creates a high and tight flag, that's going to be bullish. And what that means is if we see this trade within a relatively small range up here, probably going to break out to the upside. probably going to break out to the upside. If we don't, if we see this just blasting back lower down to 40.50 and 4,000, then this may be a reversal process. This may be just a bear market rally. Regarding the anchored VWAP, you put in whatever time represents, and you'll know it if you get it right, right? If you go over here and your anchored VWAP starts at the opening bell, then you've done it correctly. But it's however you have the time set up in your brokerage platform. So if your broker platform says 6:30 over here, then you'd use 6:30. If your broker platform adjusts for your time zone and it says 9:30, then you put 9:30 in. So put in your local time of whenever the market opens. Okay, so there's a couple of things going on here. Yesterday we put on a low probability iron condor for 250, and right now it's showing $1.90. So what I'm going to do is I'm going to bring down my 210 debit to close. I don't want to give them 210 if I can get away with something a little bit less than that. And I'm going to replace this order, and I'm going to bring it up to, let's bring it up to, oops, we don't want to go up. Let's bring it down to, let's just do something reasonable. Let's go to $2 debit. Let's go to $2 debit. And we'll check on that once the market opens and see if there's anything that I can do with that. But I'd like to see if I can get out of this one early. Okay. So right now this is showing about a $30 profit. So that is not exactly a $2 debit, but we'll see. We'll see if that's just a bad print or whether I have to go back up to 210 or not. All right. So we'll watch that carefully once we get the opening bell. That's coming up in 1 minute and 15 seconds. Now, looking at the expected move for today, we have 23 handles. We'll start with a 25 wide. We got PMI composite 942, ISM services 10 o'clock. Probably don't want to trade over that. But I'm trying anything I can these days to, if I go with a more narrow iron fly, then maybe I can hold over the news. Okay, 45 seconds to go. So if I go with a 20 wide iron fly, I think I can trade over the news with that because the risk management's better. But we'll find out. We'll find out. Okay, anybody else have any questions? So what we're going to do is we're going to get our opening expected move from this. Right now it's 23,077. And whenever the market rings that bell, yesterday it was 20.37. It was pretty small. It's pretty tiny. We've got 10 seconds to go. 10 seconds to go. And let's see what we got here. Here is today's opening expected move. And it's going to be what? Hey, Juan. 2304. 23.04. Now let's go check this order. Let's see what we're doing here. 225. Shoot. Okay. So it expanded out. I'm going to bring this down to 210 as I originally had it. Good till cancel. 210. We'll bring that up. See if we can get it to fire at 210 today. Would like to be out of it by tomorrow. Be nice if we were out of it today. Okay, so we have our opening expected move. And let's go get our gap. Let's get our opening gap. What is our opening gap for today? And we have no gap from yesterday. We had an early gap up, and that got destroyed. So let's mark today's gap and see if it continues and see if it gets filled. So there is today's gap approximately. That's close enough. And the opening print for today is 4119.75. 4119.75, and we're going to use that in conjunction with a 23.04 expected move. We have an upper expected move of 4142.79. Lower expected move 4096.71. So you can see both those upper and lower expected moves. We're going to have to move them down today. So let's go over to the intraday chart. and start that process. Okay, let's see, where's our upper and lower? Okay, so first of all, let's move our lower expected move down. And that's going to be moved down to 4096.71. 4096.71. Upper expected move is 4142.79. 4142.79. Okay, so there's our opening gap, the gray box up there. I'm going to reset our anchored VWAP. This will make more sense in maybe 15 to 30 minutes or so. Right now, it doesn't make a whole lot of sense because it's keying off of yesterday's open. So we'll key this back to today's open. And there we go. There is today's open. Do we have a gap from, yeah, we do. We have a gap from last week on Friday. We have got a bunch of gaps here. So those are going to be a target. Those are going to be a little bit of a problem if the price wants to go higher. Okay, so there we go. There is today's squeeze and cheese. Let's go over to the analysis tab and let's look at our risk profile of, that's our low probability iron condor. So we have the VIX apparently going up slightly today. So no activity or no action needed on that. Let's go over to simulated trades and we'll put this into the analyzer. And I'm going to do a 20 wide. I'm going to do a 20 wide. I'm going to make this narrow on purpose because I want to see if I can put this on and trade over these events. So I'm not going to do this as an official trade. I'm just doing a lot of experimentation lately. Most of these have been working, and it's actually the price has been reasonable in terms of its movement. So I'm going to go 20 wide here. So this is going to go up to 41.25 for the long call, and then 40.80 for the long put. That's going to be a credit of 15 and change. Okay, I got something wrong. 41.05 plus 20, 41.05 minus 20 is 40.85. Reset the credit for about 14 bucks. That's pretty tiny. Pretty tiny. Risk is just over 500. We don't want to be taking that much risk. Probably want to bring this down to 4,100, quite honestly. Let's bring this down to 4,100. Let's bring everything down 5 points. Reset credit. Why is this underwater like that? That's weird. It should be right at 0. I'm not sure why this is operating like that. Okay, let's see what we got. Let's see what market internals are doing. Yeah, they're reasonable today. They're reasonable. Starting off in negative 150, actually climbing just a little bit. Let's see what we've got. So the idea here is that I'm going to set up an iron condor, which is smaller, more narrow, and this will allow me to risk manage it better. So I'm going to put this one on. And I'm going to look for somewhere around 50 bucks for this. Okay, let's try to get on at the midpoint. Look at that, the midpoint's all the way up at Yeah, it's all over the map. Just going to give it a second here. Okay, got to bring it down. Bring it down to 70. Got to chase this a little bit. We're probably really low volatility this week. Good morning, Juan, if I didn't say it before. Yeah, not a lot of liquidity this week. Really, really tough to get fills at midpoint. So I'm going to have to bring this slightly down one more time. Jeez. Ah, there we go. Okay, so finally we got 1370. Finally. Okay, so the entry point on this one was 40.94. And I'm just going to put this under. So we're still working this order. That's still good. I'm going to put this under my 0 DTE group. So we got filled for 1370. We'll try to get out for 1320. And I don't want to set up a stop on this unless I have to. Like if we start to see an extended move, then I'll probably blow out of this thing. But the narrow spread should keep the risk down. So 1320. We're just trying different things this week because the market's changed character and it's made it more difficult to get into these things. We had some trades, maybe a month back where we were in for 90 seconds, 3 minutes, those kind of things. It was just crazy because implied volatility was overstated and the market was scared. Implied volatility overstated. Now we have the opposite condition. We have realized volatility is actually moving more than implied, and it's making things a lot more difficult. Okay, price is going nowhere. We'll keep an eye on this one. We got that at 1370. I don't know why this is underwater like this. This is really strange, the way the analyzer is working. But this risk curve should be fairly flat for me today. Oh, I see what's going on. I've got the volatility adjustment all wrong. There we go. I had the volatility adjustment. I was playing around with something last night. It was up by 2%. That's why. So that's a little bit better. So you can see we got a pretty good move out here, and we're only going to, we're only risking a couple $100 on a pretty good move. Let me stick up the expected move as stops on here. I'm not going to adhere to them, but just as a reference point. So the entry point was 40.94. The lower stop would be 40.71 down there. Upper stop would be 41.17. There we go. All right, let's see what is moving today. We have the VIX up. VIX up, interest rates down. We have utilities up. We have staples up. We have all risk assets are slightly down today. So this is more of a defensive market to begin with. You can see the Dow is up. We have energy is kind of flat. It was up earlier and now it's flattened out. Good morning, Len. So not much in the way of anything going on right now. Just a kind of a shake and bake day. So we have Johnson & Johnson is up. Walmart, very defensive. Not really worth looking at these all that much. So we may just coil sideways into Friday's jobs report. course, the market's not open on Friday, but the futures will be open through the announcement 8:30. The Globex will still be open, to my knowledge. Man, silver and gold continue to just rip right now. Silver and gold. Look at silver's move yesterday. Gold is gapping higher. Looks like a little island gap so far. Might be filling that gap. Very strong day yesterday. I'll tell you what, doing covered calls on silver and gold, like they work, sort of, and then all of a sudden when the market starts to rip, all they do is they bleed cash from you. So it's just not worth doing. So what I end up doing is like I just say, all right, I quit. I'm not going to do covered calls on silver and gold anymore. And that's right around the time that the move stops. And then we get a year's worth of consolidation. So silver and gold are probably the two most frustrating assets I've ever traded in my life. If we look at this on the main fractal chart, what do we got? Let's look at GLD. Look at this. We have this, unbelievable move from 0.5 all the way up to 10. And then what do we get? This is kind of a big cup with handle, isn't it? It's a monthly cup with handle. Good Lord. So where is this going to top out? Who knows? But that's a monthly cup with handle. And that's a fractal pattern because this by itself is its own little handle. And so you might get another daily handle over here setting up. Everything's fractal. Okay, what's going on with this guy? Not much. Not seeing a whole lot of decay in the mornings like we used to. Now we do have, we've got the PMI. Is it the PMI today? PMI composite, I believe, has come out for subscribers already, but will come out to the public at 9:45, and then we have ISM services. So I'm just gonna hang with this guy for a little while. Let's see what's going on with the exit on our. The low probability is just this will probably fire today at 210, and that'll be fine. That'll probably fire at 210. Won't have to do much of anything. We get some time decay as we get past the first hour. And this should be reasonable as long as we don't get a big move. We'll be fine with that. Let's see what else I see moving here. Not much of anything, really positive. So we actually have AMD and NVIDIA dropping today. A little bit of a flag on AMD. So we do have a $95 short call on this one. If it drops a little further, then what I'll do is I'll roll this out to May or June, probably June, because right now this is just at the money, and I won't be able to close this for anything reasonable. So if we look at the AMD, where are you? Okay, the April 23.95 call. So that's still a big loss if I move it out right now. So we'll just let it go. Let it burn some more time value off in the next week or two. See if this pulls down any, and then I'll see if I can roll it out. So this may drop as far as 88 for a swing test, and that would be fine. Let's see what happens also on NVIDIA. NVIDIA has been really uber strong for quite a while now. Still hanging out there, not doing much of anything. Okay, let's see what's happening with our opening range here. Very little. Very little. We've made some attempts to close on that gap, and you can see the anchored VWAP. The price is just kind of oscillating around that. So it's not taking a stand yet, bullish or bearish. Let's see what the market internals are showing. Market internals are actually starting to become more positive now. We see the advancers minus decliners are moving higher. We start to see the tick, which was originally negative, is started to normalize back to zero. We see more of these advancers kind of squeezing up there. So I would expect to see the price kind of popping higher at some point here. All right, all right. Now we're actually seeing some whale setups. We haven't seen whale setups in a long time. So here's Google. Google's setting up with a whale setup, which is above the 200. We have JP Morgan, which is flagging out. That looks like a bear flag, though. I'd be cautious of that one. Nike. Somebody else can trade Nike. I'm not going to trade Nike. Here is TLT, Texas Instruments, and U.S. Steel. So how does rolling out your AMD work into next month? So this is why I don't like to do that. So to your point, right now, if my cost basis on excuse me, my cost basis on AMD is 95. So you can see this here. The trade price is 95. So I have sold the 95 call. Now, over the last several months, we've sold various calls and they've expired. And so we've actually dropped our cost basis below 95, but we've just used as a reason to sell premium. That's really it. So we made money against that asset. So I don't want to necessarily do anything right now because there's only the 21 April is what? What is that, 2 weeks away? It's 2 weeks away from Friday. If the price ends up going higher, a lot higher, then I'll have to make a decision as to whether or not I want to keep this thing, roll it out, or just get called out and just say surrender AMD at 95 and keep my original credit, and I just get called out. Now, if I roll this thing, ideally what I want to do is the trade price was $1.74. That was my original credit when I got this thing. I would honestly like, if I'm going to roll this, I'd like to do it for closing this for less than $1.74. I don't want to take a loss on this if I can avoid it. It's just more of a principle thing. So if I can roll it, let's say for $1. So I pick up a plus 74. That's going to be my profit. And then I can pick up another, let's say $2 for maybe June. Let's see what I could do here. Let's see if I go to AMD. This will make more sense when we get it a couple weeks from now because I don't really know what it is. So June, May, June or so. Let's see what we can do for May. Can I do a 100? Yeah, I can. And that's actually pretty good. So a May 100 would be fine. I mean, that's a lot of premium up there. Look at the implied volatility is 48%. So I could get a nice $5 capital appreciation. If I got called out at 100, I could make some money there. I could make $500 on 100 shares. That'd be nice. And I could also sell $385 of premium. So I could technically roll these things out right now if I wanted to, because I could shut this down for 276 and then roll it up to 390, 385. So I could make an additional, I could use this to pay for the closure of the old one if I wanted to. But I may not have to, so I'm just going to sit on my hands for a couple of weeks here and see if there's anything I have to do, right? But I like the options of this. This is what happens when you have a very strong stock, is that you have a lot of different alternatives that you can play. Okay, we're still doing well on this one. Not much going on. It's up 25 bucks. Probably will hit 50 at some point here this morning. So I went narrow on purpose on these things because I want to see if we can get into, I'd like to get into a trade that we can do literally every single day. And I've not been able to find anything like that yet. So unless we could do something like maybe a low probability condor, that would be one thing. It's going to be based on the risk. Like if I do a low probability condor, let's take this one out and let's do a low probability condor on today's options. I'm going to look for about a 25 delta. Look for about a 25 delta. So analyze simulated. So let's do iron condor. So 40.80, and then I'm going to come up here and I'm going to sell the 41.10. 41.10, 41.15. Oh, man, it's just so tight. Okay, so let's say I got that for 235. And I look at this and I don't like the way that this sets up. So what I want to do is I want to move the puts up. So 85, 80. I'm moving the puts up. And that's a bigger credit. Okay, and then I could maybe, if I wanted to, I could move the calls slightly further out. 15 to 20. And that shows that's a, ugh. So we're going to have to be roughly somewhere around 250 or so, but like you can see how difficult it is to play this via the skew. So we could do something like this every day, and the worst that we're going to see is we could actually roll this too. So rolling it is if we stepped in front of a really nasty trend, that what we could do is we could close this down, roll these over, pick up some credit that way. And if we had to, we could actually turn this into an iron fly. We could roll this and adjust it twice. It's a lot of effort though. It's a lot of effort. It's really nice if you can just put one trade on and just let that sit. I'll do the rolling if I'm doing something like a 5-day. If I'm doing a 5-day trade, then I don't mind doing those. Ooh, that's weird. Okay, we're getting a little bit of a pump. It's up 30, 35. It might hit here pretty soon. Okay, anybody have any questions? We've got our, at 10 o'clock here, ISM Services Index. Again, I don't think that's going to be a big market mover. What I'm hoping is that we're past this whole inflation thing. I mean, inflation is going to be around for some time, and it's going to be talked about for the next, however many years. It's going to be an issue. But I don't think it's always like if you go back in time, like 07, 08 was really the only time we talked about inflation. Looking at the PPI and the CPI and inflation and stuff like that, because inflation started to hit around 2007, and then market crashed, interest rates went to zero, and nobody cared about it anymore. Nobody, it was off the table. So are we going to have the same thing happen? I don't know. But right now, what we're showing is that the Fed funds futures are showing that the Fed is pretty much done. And if the Fed's pretty much done, then we don't care about the CPI and the PPI anymore. They become more of ornamental. It becomes more of a, like, well, that's nice to know. But I don't think it's going to be the huge market mover like it has been in the past. Like, for example, this one back here, back in October, was enormous. This was an enormous day. That was all based on the CPI movement. We dropped like a stone to start out the day. I think we were dropped something like 80 or 90 handles, and then we reversed all of that to close higher on the day. That was a huge candle. That was a bad CPI print, and the market decided it was like, okay, it doesn't get much worse than this. So we're done. That was the bottom of the market so far. So we are seeing a little bit, we're seeing some positive ticks coming in here today. We're working on this gap. The gap is just about filled. We're looking at this iron fly right now. Iron fly is up. I want to see if I can get my 50, get my fair share of $50. We're almost there. So again, I have no plans to do anything with this. I'm just going to hold this until it fires. And if it starts not to work for me anymore, I will just get rid of it. That's the way I want to play this thing. Oh, that's the low probability condor. Where's the 0 DTE? Okay, so it's a little less than that. So we should have the low probability condor, this one, which is yesterday's trade. This one should fire here maybe as early as this morning. Looking for 210 debit. That's going to give us somewhere around 15% return, something like that. That's not bad for a couple of days. That'll work for me. That'll give me my fair share. And then the iron fly here, this is a 0 DTE trade. Now we could go, if we had to, we could go to 15 wide. 15 wide is going to really compress everything together. It's going to slow down the trade significantly, but it's also going to give me a much, much better reward to risk. All right, let's see, what, 1370. Let's bring these down to 15. 1370 down to 1120, right? So you can see the risk now. The maximum risk is going to be like 380. That's the worst it could ever get, and it would have to have a massive move to get to that point. So this is going to be a much slower trade. This will probably take a couple of hours to get $50. But this could be a trade that we could do literally every single day. And it's going to be a binary result. Either we're going to get our fair share or we're going to have some type of loss on the trade. But you can stay in this for a long, long period of time and wait for the price to mean revert, and that keeps you in the game. Okay, we got 20 seconds to the next report, and then we finish printing our opening range. Anybody have any questions for right now? Anybody that hasn't checked in want to say hello? All right, so there's our report. There's our ISM services coming out, and we're getting a negative reaction. So far, movement all over the place. I don't know what the result of that is. Hey, John, hello, good morning. Let's see if we get some decay coming in from this one. No, not yet. Let's see if we got any decay coming from, we're almost there on the low prob. 210 debit, and it's bouncing between like 215 to 235 to 260, 215. I like the 215 number better. Price is all over the place. But still a pretty small opening range. Less than 10 points. So again, what I'm trying to do here is I want to see if we can find something that's reasonably risk controlled that we can do literally every single day. Literally every single day without fail. I mean, we've been trying the iron flies now for 3 years, and sometimes we have an opportunity and sometimes we don't. It's almost like, sitting in the woods wearing a ghillie suit being a sniper. But I want to see if we can find something a bit more mechanical to trade. Okay? So this one, yeah, Yeah, I'll see if I can take this one off here shortly. Okay, anybody have any questions on this? So I will. I'll shout out in the room when we close down the low prob iron fly. I'll give you guys a trade update on that. But that should fire at your target at about 215 or so. That's not bad for a 2-day trade, 15%. I mean, I'll do that again and again, and we'll look for that. The reason why we put that trade on yesterday was this exhaustion figure. We could do one again today, but the problem is getting out before Friday. So what I think will happen is the implied volatility will start to sneak higher into Friday and will trap people into positions. So, it might be showing a profit tomorrow morning, but then by the afternoon, they kind of crank down the implied volatility and things start to rise up, and then you just can't get out anymore. You got to ride it over the jobs report on Friday. Don't want to do that. So I'm going to kind of shut things down. Look at that. Absolutely flat. Yeah, we should be out of this dude here before too long. All right, guys, that's all I got for today. Thanks for joining us here today at Ready, Set, Trade. We'll be back here tomorrow morning. See you mañana. All right. Adios, folks. Be good.